What's up, everybody? Liam O'Reilly, economic realtor. Today is Wednesday, the 2nd of November. The Federal Reserve just increased the Fed funds rate to between 3.75 and 4%, which obviously has repercussions throughout the rest of the economy. In this video, I wanted to give a recap of what I heard, in Jerome Powell's speech, but really particularly when he was asked about when in the question portion. People asked some great questions, I thought, this week, and he said a lot about where he's taking the Fed funds rate, what factors he's looking at, and and then towards the end of the video, I'm going to relate that to specifically the Vermont housing market, but I think it's going to be indicative to the housing market across the U.S. So the biggest thing that I heard, and it came in the questions, the Federal Reserve thinks it's much too soon to think about pausing. They're not even thinking about pausing. More rate hikes are coming. There's no pivot coming. They're not pausing. They want to get a handle on inflation, and that's what they're going to do. So, I mean, coming into today, there was a lot of talk about a pivot. There was talk about a pause. People were feeling dovish, as they call it. Federal Reserve, Jerome Powell squashed that today. More rate hikes to come. They haven't decided where they're taking the Fed funds rate. They haven't decided how long they're going to keep it there. He said they're more focused on where they're going to go as opposed to how fast or how slow they're going to get there. That's not as important to them. So, he really wants to just get inflation under control. A big question that somebody asked in the audience, I forget who asked it, but I thought this was a great question. They asked about the other countries and the effect that our rate hikes are having on other nations, and if that is factoring into the Federal Reserve's decisions. And Jerome Powell said that a strong dollar is better for these nations in the long run, and it's going to be better for the U.S. for decades to come with a strong dollar. So they're really all they're focusing on is getting the dollar to a stable value, squashing inflation. They're not worried about the damage that does to other countries. And they're looking at the jobs market as an indication of the U.S. economy to make sure everything's okay here, which right now, the jobs market is very strong. It's very stable. There's a lot more jobs than there are people looking for them. So as long as that remains the case, the Federal Reserve is going to continue to hike like crazy. They're gonna, rates are going up. I think the mortgage rate is going to go up to around 10% at least. I mean, just by, coming into today, people thought that the Federal Reserve was gonna hike to around 5%. But the fact that he said that it's way too early to think about pausing means they're going to hike again in December. He didn't say how much, so that could slow. They're going to look at the data and figure it out. Not that I think that they have I don't necessarily believe in the Fed. I don't think we need a Fed, but regardless, we have one, and it impacts you. It impacts me. It impacts our financial decisions. So, they're going to keep hiking rates. It sounds like into next year. The rate hikes are going to continue to go. I mean, when he says it's too early to think about pausing, that means, if they're not even thinking about it, I don't think that means that they're going to pause at the beginning of 2023. In my mind, they're going to hike for the foreseeable future until they notice the effects, and specifically with inflation. So something I wanted to bring up too is, they talked a little bit about rent in the numbers, in the inflation numbers. So they're using PCE as the main metric to go on, which is basically core inflation without energy and food factored in there. So without the high gas prices, without higher food prices, because those are too volatile, and in the Federal Reserve's mind, they don't have as much of an impact on those items. Which I don't know. I mean, I think higher interest rates hurt the supply chain in general, and it hurts businesses in general. So, you know, that includes food companies, and that includes energy companies. But regardless, they're using the core inflation PCE, which a large portion of core inflation is rent, owner's equivalent rent. So it's not exact rent, but it's owner equivalent rent. But they also use the current rents. That, you know, if somebody rents out an apartment now, they're using those current rents and where they're at today. So Jerome Powell mentioned that a lot of that core inflation number, you know, a lot of those rents haven't turned over yet. So if you think about it, there's people that rented their apartment back in January of 2021. No, sorry, January of 2022. And they're locked into that rate. That was the market rate for January 2022. And they're going to be coming up for rent renewal this January. And they're going to be, you know, even if you rented in January of 2022, you probably signed a lease in December, maybe even November, depending on where you live. So they're coming up to renewal now. And they're going to be signing a market rent rate that has increased over the past year with inflation. So they mentioned that we could see inflation rise higher. We could see rent inflation continue to rise because the number that they're using isn't the current market rents. It's an average of the rent throughout the system. So, you know, and then going off of that point, hiking interest rates makes it less affordable for people to buy. It makes it harder for builders to build. So you're crushing demand on the buy side, which is increasing demand on the rent side, which is already lagging, and you're using that as a main factor into inflation. So in my mind, hiking interest rates is, in some sense, is hurting, is making higher inflation, at least through rent, which is a factor. So anyway, that's kind of what I see happening. I see inflation staying high, and I see rate hikes continuing into the future. I mean, that's just what he said. So what I think is going to happen with the housing market, nationally, and, you know, specifically here in Vermont, where I'm really familiar, you know, the places, at least in Vermont, the most insulated places are going to be the places right around Burlington. You know, South Burlington, Shelburne, Colchester, the towns surrounding Burlington are usually the most insulated. And then as you move further out, generally those will be more affected, because if people can, they're going to try to live closer to Burlington on average. I mean, there's people that look all over the place, St. Albans, Montpelier, but most people like the Burlington area. So generally that's going to be most insulated. You know, other places we saw demand start to drop over the summer. We've seen demand drop in Chittenden County too, within the past few weeks. I mean, in my last video, I talked about the move-up buyer. There's a reason for them to move, because they want that home that's more spacious for their family, but they're not moving because it's 4 to 5 times more expensive. Rates are at 7% right now. If they get up to 10%, they're not even going to consider moving. I mean, they're not considering moving now. So that really hurts the move-up buyer, and that $600,000-$700,000 price range home that's a little bit bigger. It's tough. It's tough for a lot of those buyers. I mean, you know, people, the shorter price range as well, the $400,000, $300,000 homes, those we've seen some price reductions in there as well. I mean, there's not $300,000 homes around here, but, you know, the $400,000s, $375,000 to $400,000. We've seen some price reductions, but really the $600,000-$700,000 homes, there's buyers out there. There's people moving from out of state, but a lot of the move-up buyers are gone. When the move-up buyers aren't selling their homes, that's going to keep prices or keep inventory tight for first-time home buyers. You can't build right now for the price of that a first-time home buyer is in, for the most part, under 500,000, let's say. That's probably where a lot of first-time home buyers are at the current interest rates. If they go up to 10%, maybe that number goes to under 400,000, under 450,000. Then a lot of these, the inventory is still going to stay tight because move-up buyers aren't selling their home and making that next step. I think prices are going to stay stable, especially towards the median price range, around that $400,000, $450,000 mark. There's enough buyers, enough demand where people can still afford that, and inventory is tight enough. I'm very curious to see what happens at the $600,000-$700,000 homes within that price range. If your home is beautiful, if your home is well maintained, it's still selling like that. There's still not that much inventory on the market. But if you come out a little bit too hot to this market, come a little bit overpriced, there's a few things wrong with your home. The home is sitting longer. There's not as many buyers. There's not as much cash out there. People are a little bit afraid. So as a seller, you got to have your home priced properly. You got to have it marketed right off the bat. As a buyer, you got to look for the right property. You got to find the right seller that wants to sell, that needs to sell. You got to find the seller that needs to sell, not the seller that wants to sell. And I know that's tough in Vermont because inventory, there's not that many homes here. So at a certain point, you just have to make your decision and go with what you got. But I don't see a dramatic drop in the median home price here in Vermont. There's just not the inventory for it. But it does feel like a slowdown is coming. Slowdown's here in that mid to high price range. And we'll see what happens. We'll see what happens in the future. So I think a slowdown in sales is what's coming for the Vermont housing market through demand destruction. That's not going to get better anytime soon, unfortunately. But it's a good time. It's a good time to buy. I think if you price your home right, because there's not that many homes on the market, it's still a good time to sell. There's still enough buyers out there. So we're kind of at this weird in-between phase where we're coming off of the highest demand and lowest supply ever into something a little bit more balanced with less demand. So we'll see what happens in the future here. Liam O'Reilly, Vermont economic realtor. Let me know if you guys have any questions. Put them in the comment section below, or send me an email, give me a call. Let me know what you guys think. Till the next video. Peace.